what if you didn't need to spend money to find out,
Yes.
right? So like the big debate, and you've even talked a lot about this content, is what is the right testing methodology, right? And so there's this debate about how much money you need to spend in the structure and blah, blah, blah. And so the question is, what if the LLMs could actually analyze ads in the way that creative strategists pretend they can, which is creative strategists pretend like they can tell you which ads work. All of them are full of shit, including you, if you ever say that.
Yeah.
But
this is why we don't make that content.
Right. So, but the question is, what if you could actually validate that you could have an LLM assess your creative prior to it and then recommend which to upload and not?
Yeah.
There's something really interesting about that.
Well, this is essentially my manual bid theory, which is that like it's a little bit more expensive than what you're saying, but not a lot more expensive, because the whole idea is that engagement metrics predict conversion metrics. That's right. And that actually engagement metrics pile up really fast.
That's right.
Impression counts are right. We do it on a CPM, 1,000 impressions. So you can get 400 3-second views for $12. So when your ad only spends $40, it's like actually it has a lot of information about how
thousands and thousands.
That's right. So I think there's a thing there where like I do think engagement reliably does this at least at a probabilistic level.
This episode of the e-commerce playbook is brought to you by Sorol. If you're a D2C founder, you probably know this feeling. Every month, your meta costs go up a little more, your ROAS slowly gets worse, and you keep thinking there has to be a better way to grow. Now, the problem isn't that your ads don't work, it's that you're completely dependent on them. When that's your only growth channel, you're basically paying rent to one platform forever. Now, smart brands are diversifying by building something they actually own. This is relationships with influencers who genuinely love their products and create content consistently. It's not the spray and pray approach most brands do. We're talking about systematic, owned influencer communities that move the needle. Over 250 brands like SoloWave, Grunz, and Obvi are doing this with Sorol. Brands on Sorol are seeing median ROAS of 7.68x because they're building relationships, not just buying posts. Now, if you're ready to own more of your growth instead of renting it all out, check out getsorol.com/demo.
Do you want to just start right in on my equity deal with Patrick?
Yeah. How is this not done yet? What are you guys doing?
We're fine.
Why can't we just get on the call and work this out?
Because there's too many other things to do. 3
episodes now.
Well, okay, so we're almost there. I mean, it is one of our rocks because we're doing US. Nice. One of our rocks to get this done before the quarter. Mm-hmm. So it's definitely happening. Okay, Patrick, my business partner soon.
Yep.
COO.
Yep.
We just been calling each other business partners because it's happening. Like it is happening. Okay, here's the question. You've been advising us. Thank you for your help.
Like 3 Marco Polos.
It's been helpful. I mean, nobody I know has thought more about how equity actually plays out.
Right. In this kind of setting, for sure.
Yeah, right. And so your advice has been extremely helpful, and it's really underrated how much that matters. Like, I think just like...
No, it's something you want to get right. You want to get this right.
Exactly.
Yeah.
I've watched you get it wrong so many times. I just don't want to follow your footsteps. So, okay. So, okay, but here's actually the thing that I want to ask really specifically, because I actually haven't talked to you. I talked to Patrick this morning, and I was saying like, okay, what do we need to do to keep moving this ball forward? And he said, well, the one thing that came up in my conversations with Taylor, because both of us are asking you for advice.
Yeah.
And what I asked you to do to frame it was, don't think about loyalty to me or to Patrick. Think about loyalty to AGF Growth. Like, imagine you're an equity holder in AGF Growth. What do you think is best for the business as you can see it? Okay. And, originally we had talked about sort of, I would own 2/3 of the business. Patrick would own about 1/3 of the business. That's the way we had looked at it. Yeah. But you told Patrick you think it should be closer to 50-50.
Is that what he said?
That's what he said. Okay. But you could say whatever it actually is. So what is it? Is it 49-51? What do you think is actually best for us? Because this is the thing I think is interesting. Our equity split may be a curiosity to people, but I'm actually really curious to unpack your thinking about why you say the things you're saying about it.
Well, there's a few reasons. So I get the sense that when you talk about Patrick, you talk about him and you've used the word business partner, not that he owns a part of your business. I think these are different things. And I think that the closer you are to equal in it, the more truly the partnership is. So that's just like a little bit of a philosophical
Should I say something? Let me say something about that first.
Okay. Yep.
One of the things that we were first sorting out in this was we think our skill sets are really complementary.
Okay.
So when Patrick brought this up on the call today, what I said was, I think we maybe hedged the initial equity conversation a little bit around the idea that yes, he was joining my thing, as opposed to it was going to be our thing, and he was going to have a really big part of my thing, right? But what I told him today was, I just don't really see it that way anymore, right? So he said, like, are you open to the idea that it's closer to 50-50? Yeah. And I said, yes, because that's how in my mind, I think of it as like
That's how
a
I
two-headed
experienced you talking about it.
a two-headed monster. Well, I'm actually glad to hear that because that's really what I feel is that like there is this thing that Patrick brings to the table that I do not bring, and the business is unscalable without that thing.
Right.
So it's like it doesn't exist without Patrick as a future thing that it could become.
Right.
This episode of the e-commerce playbook is brought to you by Portless. Your competitors are panicking. Their holiday inventory is sitting on a container ship somewhere in the Pacific, arriving maybe by late November. But not you. Your inventory just finished production yesterday, but it's ready for sale tomorrow. With direct fulfillment logistics from Portless, cut your inventory lead times by 90%, meaning you start generating cash flow immediately, not in late November. Think of it like a China-based 3PL, but with a North American delivery experience. Here's how Portless gets you selling for BFCM faster. Onboard inventory from your factory in 2 to 3 days, not 60 to 90 days. Start selling immediately while others wait for containers. Generate cash flow now to reinvest in BFCM marketing. Restock winners in 3 to 5 days throughout the entire season. With Portless, you'll be months ahead of brands waiting for containers. That's extra months of sales, reviews, and cash to make this the best BFCM ever. The math is simple. Start selling your products in days or wait till November. Head to portless.com today to get your free quote and see how direct fulfillment can transform your business. That's portless.com today.
So anyway, so to your point about the equity reflecting the actual relationship.
I don't think that's true, by the way, that you say that. You're very differential in that, but I think you would figure out lots of things without him. I think it's the question of like how much more valuable do you think he can make it? How much faster? But regardless, like I think that you should maintain control over certain decisions, which I think is what the 5149 represents, and you can define what those things are. I think they should be a pretty small subset of things that wouldn't require both of you, but there should be some things. And then the ultimate protection for me is the buyback right. Like that to me is actually the most important thing, which is the way you hedge the idea of whether or not you're actually complementary is that for him to get to a place where that 49% is fully vested and owned, like there should just be a way for you to get your company back in the event that you guys are wrong for whatever reason. And I think if you do that, then there's pretty little risk to the partnership because in the event that you don't exercise the buyback, it's because you've realized the value. And so in that sense, it's like the splits don't really matter other than what they sort of represent symbolically, because the buyback actually represents the hedge against the value creation, getting to a level that would warrant it being a good partnership. Because the second it's not, you buy him back out and you shut the partnership down, and that's only cost you whatever the cost of the buyback is. So I think that's where I look at it and go like, hey, you guys are creating a symbolic partnership that's governed by this buyback right that actually is about the value creation. And so like the amount matters. I know like Patrick, he like when he initially messaged me, and I'm assuming we're okay to share.
Yeah.
He was like, I don't think you're right on value. And I'm like, well, I don't think the value is the thing that you guys should get hung up on.
Yeah.
Because I think to try to value the entity today would be the wrong exercise for what you're trying to create in this partnership, in my opinion.
Oh, so I think that's right. Partly like you can't do like a TTM EBITDA value on this.
I don't think so.
And I think for multiple reasons, like it's just not a bank loan, like it's not like, and it's not like a public market thing. So I think there's a bunch of questions around that I think are helpful.
And what I even said to him is like, if you don't think Andrew, the person, is worth this much money, then what are you even doing?
That's right.
Like then I think you are making a horrific bet in total.
Yeah.
Like if you think the distinction in value, Andrew's value to you for what you guys are going to do is the difference between 1.7 and 1.1 million dollars, then you're in the wrong endeavor.
Yes.
Like it should be so obviously worth that amount of money that we're talking about in this distinction for what you guys think you're going to go make together. Otherwise, like get out of here. Because this is not trying to buy a stock to make 12% return where the base underlying cost price really matters.
Yes.
Like the distinction between 1.3 and 1.6 in terms of the total value creation in the future should be inconsequential.
Those numbers are fake.
I'm just saying that I don't feel like that's the right assessment that like, oh, you're worried about whether you're going to make 12% or 22% in the long run. Yeah. Now, again, a part of this is like your guys' conversation of what is the end game? Because if the end game was sell in 12 months, well, then the underlying cost of today really matters.
Yes. Yeah.
But if you're saying, look, we're trying to build a $50 million thing, well, then like the underlying entry point today probably matters less, So
this is the reason I think it's an interesting conversation worthy of like podcast time is because one of the things I think that you're really good at doing, and I think I've learned from watching these conversations play out at CTC and sort of the things that we've been in together in various ways is like the way that equity essentially ought to be aligned to reality, basically, right? Which is like, okay, so what is the actual partnership like, and what are you actually trying to accomplish, and what is the value of the person, and what is the and like it's not.
What do you want your employees to think of each of you?
That's right.
Like, how do you want them to be perceived hierarchically? Like
yes.
What kind of authority do you want to grant each of you? Like, there's lots of things that it communicates.
So I think all those things are good. I don't want to get too hung up on some of the things. I think you brought up a lot of good stuff there, and it makes sense. So you think the idea of like a closer to a 50-50 split is a bigger reflection of the reality of the partnership?
The other big concern I have is just he's rich.
Yeah.
This is like one of my fundamental concerns.
Because he sold supply.
Yeah. And again, I don't know how rich Patrick is. I've never asked him for his bank statements. But like, I'm genuinely concerned that he's going to tap out in the event that things are not providing the long-term upside, or his family he starts to see a cost to his family where the benefit doesn't map.
So you're concerned about that for me, essentially, that eventually he would go I no longer need to do this.
Yeah. So it's got to be really worth it to him.
Yeah.
And so maybe it is at a third. The difference between 33 and 49 is probably less consequential. I think it matters somewhat.
So I see you want him to put more in now.
More.
So
I want
because you want him really pot committed.
Because I think the two of you together, fully committed as assets, like I think you guys will deliver value to each other. And my biggest concern is that it doesn't matter enough to him.
Yeah. Yeah.
Because I also think he's developed all sorts of like philosophical principles about work-life balance and other things that concern me. That's like a concern I would have about both of you in some ways.
Right. That's actually part of the reason why I like partnering with him, is because we are so aligned on that stuff.
Yeah.
Like we have so much shared vision that I don't think we're going to get to a point where he and I are like, hey, you're not pulling your weight here around these things, because we don't. Yeah, because we are not necessarily trying to create the largest outcome possible. And again, this is another thing I think you've been really good on. I remember a long time ago you said like you didn't want CTC at a different phase of CTC's business. This is no longer true, I think, of CTC. But you didn't want to use the word like we're going to be the best at something.
Yeah, right.
And
it would cost too much. Yeah.
Right. The logic was when you watch Kobe Bryant say he wants to be the best, he means I'm going to shoot 2,000 free throws every day. And I'm going to sacrifice everything else in my life for the achievement of that idea. Correct. Yeah. I heard a crazy story about him in a meeting with some people where he almost kicked somebody out of the meeting because they were talking the way that Patrick and I talk. That was like post-playing career. Yeah. Anyway, when he was like investing potentially, and he was like, you should just leave this meeting. You don't need to be part of this. So anyway, but yes. And I think and that's what I mean when I say like, we're not trying to create the largest outcome possible. I recognize that we are not doing that, but because we're aligned on that, I feel good about it. Anyway, I think the 50-50 thing, that's interesting. So it's partly about perception within the company and all those kinds of things, but also partly about you want him to be pot committed because you're concerned about that. I'm less concerned about that. It's a relationship. And I just think that the 13% value, like again, I just go for both of you. If you don't think he can create, like to me, I do. I have no problem with it. I just go like, what are either of you giving up here? Nothing. Some money. He's putting money in to buy it. That's right. So that's actually the biggest thing is he has to be. I think that's the biggest cost in the whole thing is like he has to be willing to buy more, which means more dollars to me now. Yes. Yeah. And that's actually my concern for him is sort of like I don't know how much money he has exactly either. That's the thing. I want it to hurt. Yeah. I want him to be at risk. Yeah. Candidly, like that's another part of it too. Is that I don't want it to be like a nominal amount of money that's like, oh, if we lost it, like whatever. Yeah. I don't want it to be that way. I think that the equity, like this is one of the things like the risk is as important as the upside. Like that you need carrot and stick. You need both. And if if the stick is like whatever, then it becomes easier to walk away from. And I'll say like for me, the idea of having less of the equity as a percentage, it also makes me think, okay, I actually have to work a little harder for the total thing to be bigger because I get a smaller percentage of the total thing. Which is what I would want if I were him too. That's right. Yeah. And I think what I'm saying is I think that aligns our incentives nicely. Yeah. What I told Patrick also about this was like, definitely talk to Taylor. Like I want Taylor's input on this. Like I think, again, if you sort of position yourself as loyal to the business, then it's like, well, what do you think is best for the business? And all the things you're describing reflect that to me, which is this thing. This is one of those things I think I have less developed opinions on and feel like the only concern I would have is if you guys are going to bring in someone else.
And so
that's actually the one concern I have too. Yeah.
So that
and almost for sure we will do something like that at some point. And so that's like the concern I have, like whether it's an employee pool or something.
Well, then I would be careful. Then I probably wouldn't go all the way to 5149 because I just would never want you to find yourself in a position where someone else could kick you out of the company. So so I do think that if you both agree, like, hey, we're going to do a 20% employee pool at some time, or we think that there could be a world where there's a third partner who does X, Y, Z, or we want to do an acquisition, whatever it might be, that would lead to a position where suddenly Patrick plus person new could affect you negatively. That's the only
What
thing
if they
I'd be
need
careful
to be
with.
able to do that?
What if they need to be able to do that?
Yeah.
Well,
what if I
again,
do such a bad job that Patrick at some point
I think
needs to?
You're being altruistic here in a way that I think you should be more selfish. That's just my personal opinion. I think you should be allowed to mess up your own company and keep it.
Yeah. Well, I mean, that's part of what I'm saying. Is it my own company, or is my partnership with Patrick at a point where it's not really my own company anymore?
Yeah, I don't know.
Until we're like actually like what we need is for Patrick and I to be able to be united against sort of anybody else at an equity level. Yeah. Again, like position yourself as sort of. I mean, I know you're confident in me. You've expressed that a lot of times. So like, so maybe you do view it as like, no, I want you. If I'm a shareholder in this thing, I want you to maintain control.
I would never give up control.
Yeah.
There'd be no scenario where I would cede a position that someone could remove the thing from me if I were you.
Yeah. Yeah. Okay.
Yeah. Or I would like so narrowly define the parameters under which that could occur. Like that. If you truly like screwed up people's lives or embezzled money or something, like fine. But otherwise, like, I don't think that should be a possibility.
Here's the thing about influencer marketing that nobody warns you about. It works great when you're working with 50 influencers a month, but the moment you try to scale to 100 influencers, everything falls apart. Suddenly you're drowning in spreadsheets. Half your influencers ghost you after getting the product. You can't actually track what's working, and your team is spending more time on admin than on strategy. Most brands hit this wall and either give up on influencer marketing or hire 3 more people just to manage the chaos. But there's a better way. The brands that really scale influencer marketing treat it like a system, not a side hustle. That means proper CRM, automated outreach, performance tracking, and relationship management that doesn't require a PhD in spreadsheets. Soral helps over 250 brands like Obvi, SolarWave, and Grunz run influencer programs that scale. Their teams spend 5 minutes on what used to take 5 hours. So if you're ready to scale your influencer program without scaling your headaches, go to getsoral.com/demo to see how this works.
Yeah. Okay. I mean, one of the things that I have thought about in all this is like in the sort of risk reduction thing, I've tried to play out the trade-off between wisdom about like looking down what you're doing there, which is like you're looking down into the future and saying this kind of thing could happen. Make sure you protect it. This kind of thing could happen. Make sure you protect it. I think that's really important and really wise. Is part of why I like really appreciate your advice on this stuff. There's another part of me though that has said, even with Patrick, like we sort of did this assessment in the beginning. We literally did literal assessments at points to try to figure out as best we could. And at some point I got to the point where it's like, I don't think I can increase my confidence in this decision any more than we're at right now. Yeah. And the reality is it could go bad. Yep. Like, I mean, I think that's just one of the things that I've sort of gone to in my mind is like, at some point, I don't know, the partnership could go bad, and we'll have to deal with that when it happens, and and so I don't want to let that be a excuse to not think carefully. Yeah. But I also am trying to be clear-eyed about the idea that like in any way we arrange this, it could go badly, and hopefully it won't. But like, who knows what the future is like, Yep. So, okay, thanks.
Good luck.
Super helpful. We'll keep you updated. Okay, you want to do collective balance sheet? I don't know. Is there anything non-businessy? Should we stick with businessy things?
We could keep one. So I'm having a conversation with, I don't know if I should say this yet, but a former colleague of ours that is getting into the game too.
Yes. Okay. I know who you're talking about. 2
of them.
I know both of them. Who you're talking about.
And so I was just thinking about.
Actually, maybe one of them on this list I didn't know. One of them I did.
Yeah.
Is it
one of them's public about it already. One of them's not.
Okay. Great. All right.
And so we're gonna have a conversation tomorrow, and I've been like talking through it, and I just keep thinking to myself how sad it is that these things are all going to end up like bludgeoning each other. That there's just this, like, when I read person 3 on that list content, I'm like, you were just saying all the things we did together, and now you're just saying it through your own voice, and like there's variations, but it's like, man, is this really the way? Is like, I think about this with TL and them. It's just like, is photocopy repeat the actual maximum value creation for individuals? And It makes me sad that it may be the case.
I don't think you're being clear. Not about the no, not about the people, about the concept. Like you're saying, there's a kind of. Are you saying that what you want is that people who have been in your ecosystem to go create new and interesting things, as opposed to replicating?
Yes. In some ways, yes. I want them and you to recognize that the reason we won and the thing that we did was compelling was because of original thought, and that unique value proposition in the world matters, and that finding the way in which you differentiate yourself from everything forever is important.
Yes.
And this goes to this. So the quote I put up there, I'm going to tie this to the first point, was this, your idea that you talk about all the time, that it's never been a better time in e-commerce and the collective balance sheet.
Yeah.
And more I've just come to have this like almost Peter Thiel to, maybe speak of the Antichrist here or whatever your view of it may be.
Yeah.
But is that like the goal is monopoly. The goal is not perfect competition. The goal is to create a monopoly. And how do you do that? And I think a lot about that in the context of a service business, which is like the most competitive, like lowest barrier to entry. Anyone can grab a mic and create a podcast world. Like, how do you actually create a unique value proposition in the world? And so I think about all those people on that list, and that's like my challenge to them. And that's why I think, like, I've always been like compelled by the idea that you think you can solve creative.
So this is right?
It's like the thing that I couldn't do. You're
Yes.
not going out and saying, do forecasting. And like, you do talk about that, but that's not, I don't feel like you're like,
that's table stakes.
Exactly. You're not
We,
just
we have
biting
to
off
do
of
it to be
CTC
responsible to
content.
clients.
You think you can solve something novel. And I have a deeper appreciation for that pursuit in the world.
Well, and so you're definitely right. And this is very conscious. Like when I assess the agency landscape in D2C, what I think is there is essentially no chance for not only us, but for anyone to compete with you
on that idea,
on the profit machine,
right? On our own ideas.
And it's because you have too big of a head start and too much money now. You have there's just no world in which I can do this. And what I'm concerned about is that even on the stuff that I think I can beat you on, that actually you still are just too resourced.
Right.
That like it's just like the Dodgers and the Brewers that we're going to see. It's just like the Brewers are really analytically good and smart as a team. They do a great job with player development. Their pitching development's awesome. The Dodgers just have too much money.
Yeah.
They're just too. So they're not only are good at all the same things, but they can afford better players.
That's right.
And so it's just going to be really hard for the Brewers to compete. Right. As I say this, probably by the time this goes out, the Brewers will have come back and won 4 out of 6. But yes, and so what I actively assess this and say, you aren't good at creative.
Right.
CTC, I would never send somebody to CTC to say, go get the creative that is going to unlock your ad account and win and create scale there. In part because you would never sell them that.
Right.
And so it would be disingenuous, right? So what I have thought is maybe Patrick and I can create the best creative shop combined with the best media buying and financial stuff in D2C, to where maybe if we can 80-20 the other things in the financial part of the business to where it's good enough, we can then get to a point where it's like, okay, our creative is going to be so good that we are going to solve this way of doing winning in creative because it will be different than what you can do, and maybe it's something that I can do, and maybe not. But that's the bet. That's the bet.
Like if I were right now going and I was sort of walking into the agency landscape to compete, the game I would play would be like, revenue is the goal. Like you want to occupy this contrarian position that is actually the place where you can develop, like, the key is to make sure not everyone agrees with you, right? You want a loud opposition. That's one of the other important things, is that you want to come out and create this sense by which there are a lot of people to disagree, but then there's your tribe. There's this small cohort of people that deeply and intimately agree with you. And then best case scenario is you're right? Like, so that's how you really win, right? Is that you have this contrarian idea and then you end up being right about it. That's another Peter Thielism, right? But I see this all the time where I watch a bunch of people go, oh, we're going to like occupy the like profitability and marketing and finance and forecasting. And I just go, okay, you're going to win some like exhaust of this, like the sawdust of this industry or whatever. But you're missing. And I think the people that came from CTC in particular, my challenge to you is not to go like, what did we learn about specifically how to be a growth strategist? It's, what did you learn about understanding how CTC positioned itself in the world all the time?
Which is actually always the thing that CTC was best at.
Yes.
Right.
Was to find an edge, an angle.
Do you think it's possible for them? Aren't you just better at that than everybody else?
But I think that's what people don't understand about what my skill really is to find that thing and to occupy it obsessively.
not only are you that, but you are so willing to be contrarian.
That's right. And to be argumentative and friction.
Yeah.
And like some of that is where people really don't want to occupy that kind of character.
Yeah, they don't like it.
But I think the person on the list, like the first person, I think she can.
She could do great.
And so I think she's going to be highly effective at this. And
Yeah.
it's the thing I want her to lean into is like, hey, people really respect your voice and you do this good job of saying, and like, it even makes me feel threatened sometimes where you're like, I'm in this big business. This is really how it works. And you're like, ooh, okay.
That's good. I was going to say that would be the place I would carve.
That's right.
Yeah.
Right. And
Can we just say that? Come on.
I don't know. I just want to be careful. Maybe
All right. Okay, great.
But yeah, I think she's going to do a good job of that. And that's like my message to her is like,
go do that. Be that.
Not be a monopoly here.
Yeah.
Go monopolize a position that no one else can occupy. What can you say that no one else can say?
Yeah.
You know?
And I think that's right. I'll tell you actually, one of the messages that somebody ought to do for this is the why you should raise money and go big in D2C, the revenue one.
Exactly.
So I actually think supplements in particular is the place where this is
so this is a good parlay into the Jordan Menard thing. So this natural CAC and like spend infinity dollars thing, which I think is insane in many ways.
Yeah.
But I spoke after Jordan at Commerce Roundtable, and his talk, people were laughing because they were so like
different.
Contrast to one another. But I actually think he's making a way for himself amongst a subset of people with a message that people go, wait a second, that doesn't apply to everybody, and they want to argue it.
Yeah.
But it's got edge. It's pointed.
Yeah.
In a way.
He's very good at that.
Right.
I'm gonna have him on the podcast soon to talk about it. And I also think he's on something very important for Meta.
Yeah.
I don't think all the implications are right, but I recorded a podcast about this.
I know, I listened to it. That's why I wrote it down. Because I was like, the natural CAC framing, I think, is like insane. But
I think the phrase is wrong, but I just used it because he used it.
Right.
But because it's not natural. I think it's a marketplace CAC.
That's right. That's the phrase. You're a market taker.
Yes.
You're not a market maker.
But the point being that there's this thing that happens in Meta ads that I think is very important for people to understand. You guys model this, and I've referenced this in my episode, that you guys actually model this specifically, right? This marginal frontier idea and these trade-offs, which is that the relationship between spend and efficiency is nonlinear. So you will get a whole bunch more spend at a slightly lower efficiency.
That's right.
Or sometimes your spend will drop off drastically at a slightly higher efficiency. And where those trade-offs are, and what it reflects is that all of these brands have the same economic characteristics and are going for the same customer. And so the example I use is supplements, where it's like, they all have roughly 65 points of margin landed to the customer. They all have it. They all have that. By the time they do all their discounting and all that stuff, right? By the time they do all their pricing, they all have that margin landed to the customer. They all have through the roof LTV, similar AOVs if it's the same customer. They're all going after the rich people who want health and wellness products. And that means that in an auction system, there are cliffs over and over again of CAC where it's like, if you bid $1 more than this person, you're going to win every auction for every timeline. And that's what quote unquote natural CAC is. Now, I do think it's important to always clarify that it's possible that a big tech company is putting the thumb on the scale somewhere in here. We should never count that out. So I think it's a marketplace equilibrium.
Means occurring in nature. Like it's the actual exact opposite. It's a synthetic market that's like dynamic relative to pricing every day.
That's right.
So because this is why big caps are so important. I think it goes back to this idea that like on Saturday, that market is different than Friday, is different than Thursday.
That's right.
For the volume at that price.
That's right.
And so I do think though that the general principle that I think Jordan gets at, which is that like your goal is to be able to be the person that can spend the most, is true, and why supplements work so well.
Yeah.
It's funny because even I think it creates capitalization as a leverage point
against
your competition if you're smart about the calculation on the LTV side and things like that. So
and if you look at some of the really huge supplement brands, it's exactly what they did, right? AG1 raised all the money. Grüns raised a bunch of money. Seed raised a whole bunch of money. I think Armor raised money. And it's because there's what everybody realized right about D2C is that it actually doesn't function like software unless you're a supplement business, where it kind of does, where it's like all the cost is the upfront getting your stuff, in this case, out to people initially. But the LTV timelines are so good that in fact, like the value realization over time and the margin is good enough. So maybe not quite software scale, but like there's like a very similar dynamic here. And what I think, if I was going to make a bet on the future of D2C, one of the things I would say is that like that segment just gets eaten by brands who realize the natural CAC thing and they all go raise a bunch of money and they just outmuscle all the bootstrapping health and wellness brands. So all the people who are just like starting this. And what I would do if I was doing public content, to back to your point, is I would tell everybody, go do that.
The other space I see it, so we work with a number of brands that are hardware plus software. And I don't know if you saw, like Aura just raised at like an $11 billion valuation.
I did not see that.
Like this is very clearly part of the future of all of this, is that like the ability to get someone to pay for a hardware at a slight loss and aggressive acquisition and have this long tail
of value,
never-ending subscription at 99% margin is like such a leverage point in this game that because the thing about the distinction between competing in a Google SERP ecosystem is that what you just said, which is that like everybody has the same economics as you, is true. But in Meta, that's actually not true. The point is that the hardware businesses are competing against the sub businesses for the same user feed, right? So you actually get blasted out of that arena by the Auras, by the AG1s, by the whatever, because they can afford to pay the 35-year-old woman's Instagram feed way more, but they're not bidding on your Google SERP for protein powder.
But that's right. This is another point that I've made is like people sort of see this dynamic, the market equilibrium at the level of Google search ads. Yeah. Everybody understands this is happening. The example I gave is like, I remember talking to some injury attorneys where they pay like $150, $200 a click. Right. The reason they pay that much for the click is because the click is worth that much to them. And so the value just gets competed away for search. And there's just a limitation to the volume. And that's that. Right. And I mean, I've literally talked to these people like $200 a click, $150 a click. But I think in that respect, Meta actually functions more like that than people realize. And that's what the marketplace CAC is. Now, what you're saying is also true,
that's right. This is where I disagree.
What I just mean is like, people think it's different because it's demand generation versus demand capture, so to speak. But what I mean is there's a way in which the click has a value that it gets competed down. And what you're saying is right. The way it stops functioning like Google is that somebody can make that click worth a lot more than everybody else going for the same click.
Yeah, exactly. So whereas the injury attorneys all have roughly the same value realization potential.
That's right.
Like you're not going to get injury attorneys suddenly bidding on, leggings.
Yes.
Like you're not going to compete in that way where you're like, oh, the injury attorney's paying so much for the leggings click because it's worth so much to them. But on the Meta environment, you do. Like that's the same person in theory, whether it's exactly leggings and injury. The point is there's a broader competition for that feed. And so I do think this is why I'm like, dude, there are some brands that you have no chance because you just don't realize enough value to win the paid advertising game.
Yeah. And you're not capitalized for it.
That's right. It's just like so. And even if you were, like your LTV sucks.
That's right.
So like this business has no chance to go into this like knife fight and win because you just don't capture enough value to get scale.
Or at least not like that. Like the way you'd have to do it is a much slower, more deliberate thing with sales channel expansion and things like that. But you're not going to get at D2C the way that
or you'd have to just have so much demand on the front end for your thing versus everything else that's like you'd have to capture this trend or moment or product that was the conversion rate was so high that you could bid so much. Like,
and I think brands need to assess that more clearly. They need to understand who they are in that. So I have a client right now who just came on. I think it's fine for me to say this. She's Birdie, Richie Machiko, who I've had on the podcast, since deleted because he didn't want someone to come to the internet with.
Oh, really?
Yeah, there were some things there. Anyway, he'll come back at some point. But great dude. And he took over this brand. And one of the things, they tried to go hardware plus software. It didn't work. All kinds of problems. Anyway, one of the things that he has said about that business since is like he thinks it's a great business at like low mid 8 figures.
Right.
Spinning off a bunch of cash as opposed to, but there's something that's really right about his calculation, whatever you think of his involvement in that business. Yeah. The calculation he's making that's correct is the way that business is currently constituted is simply not set up to go scale to the moon and those kinds of things. Instead, it's like you just have to either accept that it's this business or fundamentally change something else about it to move it. Yeah. But you can't let it be a low LTV customer acquisition business and then expect it to get to $100 million. Like,
I don't think you can expect it to sit at 8 figures and just stand there and protect it. I think it's dead.
Yeah, that's possible.
Because the difference is that in that environment, if there's somebody who sells a similar product who's willing to take less margin, then you just get competed down, and there's no barrier to entry to making the product.
It's the Kalo problem.
Right, exactly. Yeah. So it's like we could not have said, oh, you know what we want to do with Kalo? Keep it a nice $10 million business. We would have all been competed down to nothing. We would have made no money on silicone wedding rings.
Yeah.
So that's the challenge.
You had to do something else in the business to expand it or something.
The only time you see this, where you see these businesses that are static, is an example where I once met with this brand who sold like restaurant hoods. Okay, so think of it as like really complex manufacturing, and they were like, there have been 2 businesses in this space for 30 years that we just compete with each other.
Right.
And nobody else enters the space. There's no competition. It's hard to manufacture. The market's not that big.
This is like Bobby,
right. There's some moat to protect the dynamics of the market that make it so that your profits don't get eaten away.
For Bobby, it was regulation basically. Right. It's so hard to get into the game for baby formula, where it was like, and that's exactly what they said. There were two brands in there for forever.
Yep.
And they didn't like either of them. They thought they could do it, but it was like this huge, difficult thing to get into.
That's right.
Yeah.
And so in those spaces, you could say like, oh, like even in that industry, when I met with them, they're like, look, we kind of almost have this mutual agreement. We don't bid on them. They don't bid on us. We both take our market share and we all make a bunch of money every year. And that's kind of it, you know, like, and so like, but it's so rare to have that actually be the market dynamic for your product category.
Yeah. That's what, I mean, that's no longer even real competition. That's what it's called. A
duopoly.
Yeah. What's that? Yeah. There's another word for a cartel, basically.
Yeah. Exactly.
That's
where
the
you
market
control
term
price and you're like, exactly.
So hey, while we're on the subject, people say this about CTC a lot, about the coaching tree.
Yep.
So why does CTC have such a great alumni list?
Well, I think we have a Twitter famous list. Is part of it is that like I think that one of the things.
So it's not real.
Well, I think there are a lot of talented people that have worked at CTC. If you like held us up against Mute6 or W Promote or Power Digital and compared our alumni and what their actual job listings were now, I don't know.
Yeah, I guess that's right.
I don't really know. It's not like the MLB where we can be like, there.
Well, that's a fair answer to the question. The answer to the question might be you invested a lot in Twitter, so it looks that way.
Exactly. I think that's part of it. Is that what people realized was that the way to get reputation, they watched me get reputation, and so they all went like, oh, this is how you become known. And so a bunch of people replicated that. So I think if you go down the list, the people who, when they refer to that list, they don't actually refer to the people who I think maybe are the most talented necessarily. They make that list the most famous people.
Yeah.
It's like you and Nick and, you know, like, so I think.
Not the most talented people.
No, I'm just saying that
I'm kidding. Relax.
Yeah.
It's fine.
But I don't know. I think what we have is like ambitious people who have built a personal brand and reputation. There's been a number of those folks. But I think we fostered a place where people learned a certain set of skills around like problem solving, ambition, and communication, and like put those things to use in a way that probably disproportionately rises to the surface.
Portless helps e-commerce brands speed up their supply chain with direct fulfillment, a fundamentally new way of managing your supply chain that provides faster sales, better cash flow, and more inventory agility. Fulfill customer orders from Asia within 5 to 6 days, providing a total domestic experience, including local labels and tracking numbers. Portless users cut their lead times by 90%, increase cash flow 3x, and can ship to over 55 countries, helping fuel their growth and international expansion. Ready to transform your supply chain and make logistics a competitive advantage like Temu and Shine? Go to portless.com and get a free, no-obligation quote from the Portless team. That's portless.com.
Do you think, so here's my question about that. Do you think that's primarily drafting, or do you think it's primarily development? What I mean is, do you think you attracted the kinds of people who were drawn to that in the first place? Or do you think that those kinds of problem solving skills, desire to be Twitter famous, whatever, do you think that those were developed at CTC?
I think that
obviously it's going to be some of a both and, but like,
yeah, I think you get a personal network effect that reflects your character and attributes primarily in your company. And so I think you got a lot of people that like exhibited traits like me, because those were the people that were attracted to me.
Yes.
And that wanted to be around me. And so what you get, and that's why I go like the Twitter thing, like I just think that what you get is a bunch of people that were productive in similar ways that I'm productive.
Yeah.
And so you tend to attract that. And so like you end up with this like thing, which is your sphere, because so much of your hiring early on is personal relationship, right?
Yeah.
Like it's degrees out from who you are. And so I think in a lot of ways, every company is going to reflect closely the person whose network was most overpopulating the place.
Yeah.
And so I think that's like a function of my community and people and like the kinds of people that would want to be around us.
Because people, I think, have asked the question because they want to have the same thing. Like when people bring this up, they say like, well, what is it about CTC that does that? And essentially trying to ask the question like, can I create that too? Or
well, so
like
the thing I would say is like sort of like dating, which is like, be the kind of person you want to attract.
Yeah.
Right. So it's like, if you want to be around smart people who lead well and are in great shape, then like be that and you'll attract that, you know? And so I think in some ways this may be sounding narcissistic. I don't know. I'm trying to make it sound less that like I did some thoughtful
I'll do that for you.
More like, it was like, oh, this is the community of people we had. It was I had a good community of people that were smart and capable and whatever.
So you are magnetic, because and part of that is literally algorithmic.
Yeah.
Right. Like you've created content that generated a following that made people interested.
Yep.
Some of that is because of the things that we talked about, which is you're argumentative.
Yes.
And that's sneaky magnetic because what it creates is interest and awareness.
And I get that. A lot of times I get young, smart people that want to argue with me.
Yeah.
Like that, even in our company, I notice that. It's like almost like you want to come spar in the arena and find out, do I have it? You know, like, and so there's an element of that I think, especially now as I've gotten a little older, I noticed that. Like I get young, smart people that it's like, I got to go see if I can hack it, you know? So I think there is a piece of that. Sure.
I think that's, yeah, I mean, that's part of it, is it attracts sort of those kinds of people. But also, like I said, literally that creates algorithmic reach, right? Like when you argue. So there's that. But then I always say that I think the most underrated thing about you is that you're nicer than people think.
I think high character and integrity. I think one thing I look about on the group of people is that we just have a bunch of good humans. They're good people.
I agree.
They love their wives. They're good parents. They like are honest. And I think our network, like even the old Aaron Dorndorf walking in and going, who are all these people?
Yes.
Like and what it is it's that. There's high levels of character that have always been around.
And that's because of you also. That's magnetic too, that people get around that and they realize, oh, there's something here about the flavor of the place that is not the same as when you think of like Wall Street or something where it's like a bunch of argumentative opinionated people, but they're all just at each other's throats. That's like my impression of it. You know?
Like we're never out at night and all of a sudden someone's passing around cocaine. Like, and you end up in those kinds of circumstances. Actually, that,
and also they're not all undercutting each other and trying to take each other's legs out.
That's right. And so I think what you all of a sudden you go like, oh, I'd like to be a part of this. This is like uplifting. These people uplift each other in a way that. So I do think that a lot of that is a byproduct. And
it's like
that's not just me. It's Josh. It's Ian. It's Jordan. Totally. Even like they're all that kind of personality that early on, like Jordan especially is like very charismatic, right? Where people want to be around him, and so I think there was a lot of that like attracted other people, and I think you're like that. I think Shireen's like that. There's just a bunch of people that I think are going to go on and replicate that because they are that kind of person themselves.
It's like the parenting thing, that I've thought about a lot. That is like, so much of what happens with your kids is caught, not taught.
That's right.
It's like which is like the most terrifying thing about parenting to me in the one respect, because it's like,
but maybe that's the perfect metaphor for leadership. Is that like you can design whatever system and recruiting process and hiring flow you want, but you're going to like basically make people like you. And so maybe the most work you can do is figure out.
Well, there's an old professor who I liked a lot, who actually whose content I never took him. But anyway, he would say, after a lot of years of teaching college students, the thing he sort of came to realize that most people won't remember almost anything you say, but they'll remember what you're excited about. Right. So like they'll maintain that. I think that's right too. So yeah, I think that's
good there.
I think that's enough about why that's worked well. But actually, one last question about it. Do we have anybody who's like LinkedIn famous? I'm trying to think about how much this is the Twitter effect.
Nick,
yeah. But not really in our world. Yeah. It's
so much is the Twitter thing.
Yeah.
Like, it really is.
Yeah. So that is.
But there's a separate conversation here about getting LinkedIn famous.
What is it? What's the separate conversation? Go. It's a random show. Talk about whatever you want.
I think that if I could go back again,
you had to build on LinkedIn.
Well, and I even think right now I might go really hard. I think it might be more valuable in our world.
Yeah.
Like I think Twitter is ego, but like I think LinkedIn might be the money. Like I think you're going to get paid a lot more money if you have a large following on LinkedIn than you will if you have a large following on Twitter.
I've paid a lot more money in what respect?
B2B ad sponsorship.
Okay. Yeah.
Yeah. In our world.
Yeah.
Not if you're like maybe.
So content creation, you mean?
Yes.
Yeah. I think that's probably true.
Like, and part of that is just like talking with Chase, who I think has done such an amazing
Chase Diamond?
Yeah.
Yeah.
Have you ever talked to him about his business?
No.
He's like very quietly gone off into the world of like super LinkedIn influencer and is doing really, really well.
Good for him.
And you talk to him about it and it's like, one, it's like way less intensive too. It requires a very different kind of content workflow too than Twitter, where Twitter I think requires so much of the like debating engagement and that kind of thing.
Yeah.
LinkedIn is not quite as much that. But so I'm really fascinated by that arena. It might be a little late for it, but it's super interesting.
Yeah. I think that could be right. Makes sense. It's just hard for me to hear you say that you could have made more money somewhere else.
Yeah, that's fair. That's fair.
Because it worked out great for you.
Totally,
so yeah,
totally did.
And a bunch of it might be less pod sponsor dollars, but I think you probably.
That's fair. That's fair. Yeah. And the thing what's making me think a lot about it is trying to replace myself right now, like on the content side and figuring out
where to do that.
And I think Twitter's.
I think that's very interesting. Yeah. I think that's like. I would bet if I was you and I was making that bet right now, top of my head, without thinking too hard about it, I would make those bets on YouTube and LinkedIn.
Yeah, exactly.
I would not make those bets on Twitter.
Because what you have to, the other thing about Twitter is that like I've given an unhealthy amount of my time and mind share to it. That like you really, because the thing about it is that it's so time agnostic, meaning it's like whenever the conversation happens is when it happens. Yeah. And that would be sometimes a random Sunday afternoon that I said something and all of a sudden it popped off and now I'm 4 hours of engaging in the hamster wheel so to ask that of an employee is also really hard.
Yeah.
Because
And you probably kind of have to like it as part of it,
Exactly.
you know.
You
And
do.
it's part of the reason that I've stayed on X and continue to engage there is because it's fun.
Yes,
I like
exactly.
it, and also I like the people there.
Yeah. And
Like
so if you don't have that,
there's an element that I think is really awesome about it, which is that like I always try to explain this to some of my other friends, like if people root for each other in this way that is sort of under and around the conversation, so that like when people are also arguing with each other, it's not just like when people talk, oh, Twitter's the worst or whatever it is.
They think about conversations about Israel and Palestine.
Exactly. It's just not like that at all.
Exactly.
People are actually really excited. I just remember like when you sold when CTC had its transaction, right? It was like
how much positive.
Yeah. Or when I think about Bill D'Alessandro when his thing, it's like people, that's the collective balance sheet aspect. It was like people are like, that's a win for all of us. And we're excited. We've been around that person, and most people I like. So okay. Growth is the CEO's job.
Yeah.
Okay, is your phrase. I really like this phrase.
Okay.
I'm not disagreeing with it.
You could if you want to.
I don't.
You kind of do.
I don't. I think it's possible that it removes some responsibility from some other people to do some things that are good for businesses. So growth is the CEO's job is a phrase of yours that you've been using a lot. So before I ask you my one question about it, what do you mean by that?
That when I think about growth, the question is, what are you growing? And I think what people mean is revenue or profit growth, and in particular, profit growth. And so if I think about profit growth specifically, it requires two types of inputs. It requires revenue creation, but it also is completely dependent on controlling the cost, including the OpEx, including the marginal value of every unit you sell. Those things generally marketers have no control over. So in particular, if you mean profit growth, it is fundamentally true that the only person that has oversight of both sides of the P&L is the CEO. If you mean revenue growth, which I think some people might, I also contend that how much revenue I can create is completely dependent on how much inventory I have, which is a decision that most marketers don't make. So I think that this is a much more cohesive effort than people would like to represent by calling one person the head of growth, who's like a sub position to the CMO and lateral to like 4 other people responsible for the inputs.
So I think that last part is the reason that it's an interesting question, because everything you said in the beginning of that answer is sort of obviously true.
Yeah.
You know, but it's not that interesting. You know, it's like, of course somebody else has to be in charge of how much inventory you can buy. But I think you mean the phrase more pejoratively than that. You have an interlocutor in your head when you say growth is the CEO's job. You mean growth is the CEO's job as opposed to this person's job, who everybody else thinks is this person's job. That's right. You used the phrase head of growth a second ago. Yes. So say more about that, which is like...
In particular, I think that what got created in our industry is we took a phrase which was very common in the world, digital marketing manager, whose job was to allocate the media budget and generate a return. And we wiped that role away and we called it growth, because the primary lever of growth inside of a business was paid media. And so it started by just swapping those titles to make them sound cooler and pay people more money. Now, what happened was when people took that job, they actually accepted a level of responsibility that they couldn't deliver on.
Yeah.
And so it became you'd hear about all the time people going, it's so hard to hire for, this is impossible. Or there was like massive turnover in the role. I watched a bunch of people leave CTC to go accept these roles and get wiped out very quickly.
Yeah, right.
And it's because you're accepting an outcome that you don't have authority over. Yeah. And so what happens in that case, and when that term gets encapsulated into one person, it's the same reason I hate the phrase chief brand officer. I don't like the idea that these collective efforts are the responsibility of a single individual. That I think is very dangerous and makes it really hard to actually deliver that thing.
You mean like a profit engineer?
Profit enginer. Okay, but the engineers
like just job, a whole bunch of different things combined into one person's job.
What does the phrase engineer mean? What does it mean?
I don't know. Somebody makes something.
Yeah, exactly. Who builds or operates a system.
Yeah, sure. Yeah.
So our job, and in fact, very clearly stated, is not an expectation that number goes up. So the reason why I want to stop being called a growth agency is because I don't actually think that we have the capacity all the time to do that.
You're saying somebody's hiring you for a job they're trying to get you to make a promise that you don't feel comfortable making.
That's right. And so what I want us to sell is a system.
Yeah.
And the outcome of the system is dependent on all of the inputs to the system, which I don't control. If you make bad product at a bad margin, and you had a production, like we're dealing with this with the customer right now, where they are so tariff affected that they've now raised their product to a price that nobody wants it.
Yeah.
And I can't UGC this problem away.
That's right. Yeah.
Like, I don't know how else to make it such that there is demand for your thing. And if you want to keep whacking the meta hammer, okay, I will do this with you till we both die.
Yeah.
Fine. But I just look at it and I go, this is
not going to work.
Not going to work.
And so this is the thing I like a lot about your phrase. And this is why it's not a true disagreement, because as I've watched different brands, like my sort of realization recently is just that like expectation setting for what your company is capable of given its current state, and then the way to manipulate the company, if you want to change the expectations, you have to manipulate the company in different ways.
Yes.
This is where like I think what you're saying is right, which is like ultimately the CEO has to make that decision, and the phrase is good. And this is where like, I try wherever I can to make content about all kinds of other things besides ads. The really fascinating thing is that ads wins always. And it's because somebody, I think, it's also why like I'm starting to think about this idea that like we would all say the idea that you should get rich quick, or that you could get rich quick, is almost certainly a lie.
Yep.
Anytime somebody's selling you that, they're selling you something that you probably shouldn't buy a priori. You should have a baseline. Your prior should be, that's probably wrong.
Yep.
Right. And so there's something about that I think is super right about what you're saying. I think I don't want to like go too fast past that towards a potential disagreement, because I think it's really important.
Yep.
Like, and so this is where I try to make content about like, here's how to hammer your supply chain, and here's how this person capitalized differently, or here's how this person thought about product development and pricing, and all of these things that are these elements that are way outside the growth agency's concerns.
But you think you can make things grow?
Well, I don't know. I mean, this is the counter argument to my bet about creative, but there's another group of thinkers I see in our space who just hammer ads.
CEOs?
No.
Oh yeah, the person that you like to reference in this story, to be very clear,
I guess
is
that's
the CEO.
Well, Zach, you know
Yes.
that? Yeah. I think that's probably. I guess that's true. He is a CEO.
Not sort of true. It's definitively true.
He is a CEO. Zach Stuck, I think, is really good at this. Jordan, I think, is really good at this. I think he's a CEO as well. I'm not really sure about his relationship and his business. And I actually don't know. I mean, I don't see the P&L, so this could just be wrong. Right. Like, but I also see a bunch of other people who have seemed to have done a really good job of this somewhere in this ecosystem. And in fact, it gets towards something you have mentioned before, which is like Alex Hormozzi's point about just sort of number of actions against the thing.
Yep.
And this is like the sort of like make more ads idea and some of that kind of stuff. So I think there's, and I'm undecided about this point. Okay. So I'm trying to say this with some hesitation, but there's this part of me that's like, is it just a lie? If people are believing a lie or believing a thing that meta ads will make them rich fast or something like that, right? That's the like get rich quick promise, right? Is it just a lie that better creative sells more products to people? You know what I mean? Like that you can actually maintain CAC and scale more. Do you think that's just wrong? Should everybody quit doing that?
So it goes back to the like genetic attribute versus outcome thing. So let's take Driveline, one of our favorite training facilities in the world.
Favorite companies in the world.
Yeah.
People we love.
If you go to Driveline and get the best training in the world,
I have an answer to this question. Go ahead.
your upper bound of outcome after training there would be what?
So I mocapped when I was there. Yep. I threw in my underwear. I could pull the video for that. I have it. Not going to do that. 72.6 at age 38. That was my fastball velocity.
So let's say I asked the next year.
Well, so I asked them exactly this question precisely to assess the thing that you wanted. What I said, I think I was age 38 when I did it. I'm 41 now. I said, if I trained your program exactly as you did it, what do you think you could get me to velocity wise, right? And the first answer I got was they thought I could touch 90.
Yeah.
Which was shocking to me.
Yeah,
I was like, whoa, I got this. And then a future answer said maybe low 80s if it goes great, mid 80s.
Yeah.
Right. I'm old, right? Like
which
athletically.
would make you great in the men's league on a Sunday.
I'd be amazing.
But would not get you to the big leagues.
It would not.
So I think that the point is that the underlying genetic attributes represent the ceiling potential.
Did you notice that I kept the 0.6 in there? Because I want every half a mile an hour of velocity.
For sure. So the underlying genetic attributes of the thing represent the ceiling of the potential tactic. So Does making a lot of creative for some brands unlock massive scale? Yes, because they have amazing LTV and great gross margin, and they came up with a novel solution in the world. Like when we created Kalo rings and it didn't exist and the margin was amazing, was our ad creative really that amazing? No, we don't reflect on it. But if we had produced 10 times the amount of creative, could we have gone further? Probably if we were smarter, we could have just gone further. We didn't even need to do all that. So I just think that the answer of the impact of the tactic is relative to so many other inputs that matter. A great lesson I'm learning in this is so I'm trying all this time for youth coaching, right? And so I coach 11-year-olds. Okay. Well, do you know what's happening to 11-year-olds?
I don't.
Boys, what happens around that time?
Oh, they start to stink and they start to grow. Which is
called
puberty.
So I have watched. So we use blast motion. I track these kids' bat speeds, and we do all the driveline drills and we train them. And I watch some kids make progress. I have this one kid right now that when I started with him on my team last year, he was mid-range. He could probably swing the bat 41, 42 miles an hour. He can now swing it 58, almost 60, and he's at the top. And you know what happened? He started getting bigger. The drill was great and certainly helped and contributes to some realization of the value, but he's just gotten big and strong. Yeah. And so I think about it sort of like that. Tactics are they're bound maximizers is what I would call them. But the bound, what is the bound, is defined by other inputs.
Yeah. Yeah, I think that seems like a reasonable analogy. What about your example that you've used a lot of times of loop earplugs?
Yeah.
Where I think you have talked about them as if they're the greatest advertisers in the world, and they've built this system that's amazing.
I think they're bound maximizers.
But the thing is, that's a pretty big bound.
It is. It's a really big bound.
And that's without
how good is the underlying attributes of the product. I think one of the things that maybe I underestimate is it's like Kalo in that massive gross margin. Yeah. So you're talking
I thought it wasn't that great.
No. Not in terms of pure dollars, but in percentage, you're talking 90.
Okay, I didn't realize that. I thought that was lower percentage margin.
Terrible LTV.
Yeah.
But all of a sudden, and this is maybe now this is a question of whether you can create this or whether this was latent in the market, which is all these use cases.
Yeah.
So they started as rave going people.
But they found
TAM. But then you went parents of kids that are noise sensitive, motorcyclists, all these things. Now, were those what they call it, problem unaware or problem aware, solution unaware markets that they unlocked, which is what great advertising should do? Yes, but does every product have the potential to do that? No, I don't think so. Now, your job should be to make sure you explore as many potential avenues as possible. And I think that's what bound maximizing is about, is how many use cases are there for the silicone wedding ring? We came up with a lot of them. Firefighters, police officers, military, people who work as chefs, musicians, we learned drummers. I didn't know that when we started. But then all of a sudden we discovered you playing the drums with your ring sucks. So you find these things that actually, now the question of was that because I didn't know that TAM existed, or was it because the TAM truly didn't exist? Yeah. Well, I think it's a little philosophical, but probably that I didn't know it existed.
Yeah.
The problem was there.
We have this framework I've talked about a lot, right? Explore versus expand for our creative. The idea is everybody who has ever run a Facebook ads account understands that you have this conversation. You open it up. You say, what ads are working? How do we make more like that? We call that expand, okay? Yep. That's our idea. We're trying to get away. In fact, we are totally away from just change the hook or whatever, right? We're trying to think about how do we create net new ads while maintaining a message that we believe resonates with a certain audience. To use the example you just used, if we were doing Kalo for drummers, we would try to find a new way. I mean, that's a really hard one because Kalo is such a simple product, but we would try to find a new way to say the same thing, or find a different age drummer or something like that, whatever, to kind of create diversity while at the same time maintaining a message. And the hypothesis underneath that is the notion that you probably didn't make your best drummer ad on your first shot. And so you could probably reach further into whatever that relative TAM is that you just described, right? Drummers and Kalo rings, by making better ads for those people, okay? That's the idea. And we put a fair amount of effort into that, and we sort of built our creative co-writer AI tool into being able to do that first. But what you just described is something different than that, which we would put in our explore bucket, which is essentially go find a new message for a new audience that still communicates, that still represents the overlap of customer desire and product value.
That's
okay.
Right. Think about our experience with Theragun is another great example.
Yes, absolutely. There's a whole bunch of different people who were using it for all kinds of reasons, from somebody who's sitting on the couch and just wants a massage to a CrossFit athlete to a baseball player or whatever. Right. So you go find new ones of these, and the more your product naturally lends to those, etc. We would put that in the explore bucket and say this is finding new messages. If you go to health and wellness products, supplements or something like that, it might be your gut health product really helps your skin, hair, and nails over here. Over here, it also helps your brain function or something like that, right? Okay, those are really different outcomes, and And so you can try to speak to both and open up new audiences. So in the story you just gave about Loop, what they figured out was there were actually a bunch of little mini TAMs within their big TAM, right? Here's the reason I say all that. I am starting to think that the core effort, especially in light of what meta ads is today and what it's great at today, is that basically the moment you hit a winner within a certain TAM, you should move on. Like, I'm kind of wondering if we should be like 95% explore. Like, essentially the way to unlock the most scale in an account is to overwhelmingly say, we found Meta is so good at reaching the right person that if you have any ad that has reached some level of scale, you're not going to beat it. It's like, it's good. The meta's, it's good enough. The sort of distinct attributes of those ads are too small in their differences. And so what you ought to do instead is go to the next one. I'm not totally convinced of that yet, but it's an idea I'm starting to play with.
So this is, to me, when I think about like redesign, one of the like pieces of content I have a dream of creating today is like the redesign of the modern marketing org and like doing a bunch of content on this. And I think there's an idea here that is right that I watch brands struggle with. So I'll give you an example of two different cases of the way they did this idea and one that worked and one that didn't. So we worked with Travis Mathew for a long time, obviously historically a men's polo business. That was like the primary business. And it's called Travis Mathew. It's named after a man, right? And they wanted to expand into women's. Okay, the way that they expanded into women's was same people, same budgets, same KPIs, launched the women's. Guess what happened the second it was stopped, didn't work that well? They just took that budget, went back to the men's because there was no incentive to work through the problem for that group of people.
Interesting.
Their job was to get the best result in the ad count, and people kept hammering on like, oh, what's your, like the monthly income? And so you would just leave the new thing alone all the time because it was never going to be the most efficient thing right away. Juxtapose that with our friend Alejandro at Mottenbaugh, who builds separate growth teams for each product line and says, you don't get to use the men's
You're like a product manager.
You have to solve women's genes. So you're fired if you don't solve women's genes.
I'm having this exact conversation with a client, and there's a question of like resource allocation relative to size because we're so overwhelmed by exactly this problem. There's too many possibilities.
Yes.
And so we go all over the place and everybody's getting burned out. And they're like, oh, we're chasing down this funnel over here and this funnel, whatever it is. And so that's like the other possibility is that you say like, you've got an internal product person whose job is, and you basically just don't grow faster than you can produce those teams.
That's right.
So you just say like each team does this, then the creative is do that. And this does go to growth as the CEO's job then because it becomes like.
Well, that's why I think it's a system design problem.
Yes.
Exactly.
Yeah.
And so even in an explore exploit team, like imagine you built that as your internal org, is that there's one group that's like, we found a thing that's winning. Your job is to maximize.
Yes.
Now you guys over here, don't talk about that ever. Your entire job is go explore new unlocks of opportunity.
That would be an interesting way for us to organize our teams.
Yeah, exactly. So I think that these kinds of ideas about system design are often, and incentive design is another thing that I think about why growth happens, is that I watch the behavior of every organization come down to the incentives designed by the people in it. And so incentive design is, again, fundamentally a CEO's job. It's like the behavior of everybody, including us as your partner, is a function of the financial incentive you've created for us. And so that's another big piece of when I think about growth as the CEO's job, is that growth is an incentive problem. The CEO usually just gets to set the compensation methodology.
What I see your mind doing there is the same thing it did with the profit system, where it's like, or whatever that you guys use, for it's like, which is like, you just go think through how the system creates the outcome you want. What are all of the elements of the system? And now how do I keep designing system and tooling to create this problem? This is how I think I'm going to beat you on creative. Is that I'm just going to think harder about it. And this is how I think you will end up potentially beating me instead, is that you'll just be able to out-resource the thought process.
Well, so let me give you
but my mentality is I'm going to think about creative the way that you've thought about profit systems, and where I'm sure there are things that you used to believe that you now think are wrong.
That's right.
But that you sort of get as many tests into the market as you can, you keep learning from the data, and then you keep redesigning and re-engineering the system to do this. And you get down to brass tacks on everything you can. The example I always use with you guys is that you are forecasting down to the level of campaign per day.
Yep.
That is, in your creative demand model is another good example of this. That is the kind of thing that I have in mind, where it's like, can we do that with creative? Can we actually say, okay, I mean, can we have a playbook for explore that is different than expand? We already have that, but that goes down to every possible thing. What about category? What about, it just like detail into oblivion, basically.
I'll give you an example of one of the evolution, the ones that I've come to believe that I think will be a way in which, like this idea of like consolidating all the roles into one person. I think that there is almost always an incentive conflict between a channel specific media buyer and a growth strategist.
For sure.
That you cannot actually design the right incentive to get them to behave according to it, where their behavior is actually impactful to the end goal and they know what to do every day. And I actually think that you have to give the controls of the channel upstream in order to make it work. So that's like an example. When we have banged our head against the wall of media buyer incentives forever. And so it's an example. The creative one, so if we could set the system thing aside, the head of growth, can we stop that one for a second to talk about creative?
Sure.
How much time do we have?
We have like just a few minutes.
Sweating.
Yeah. We should leave in a few minutes. Though I do have one last question that I want to ask you too.
Okay. So let me do the...
it is short. My last question is short. Do creative and then I'll ask you a question.
I just saw this today. So this kind of overlaps with AI. So I've been thinking a lot about so one of the challenges with our creative system is that everything we're doing right now is about helping people to answer questions about how much, the efficiency, expectations, but it's not enough around net new value creation. And so Eric Seifert put out this tweet today of this study.
He's so smart.
Super fascinating. Did you read it?
I did not, but I just like him so much.
Okay. So it's a study out of Cornell where they tried to see if an LLM could be predictive about ad performance prior to its launch. Okay. So they do a study and they did it against the variable I don't like about the study is that the comp was to human declared intent. So they took 9,300 people and they showed them ads and they had them pick which one they thought was most impactful to them. So it's a survey response more than an actual transaction.
Okay. That's a really big problem, but keep going.
I agree. Yeah. And then they tried to see if they could get the human or the LLM to predict what the humans would say.
Yeah.
And they did. They were able to make the LLM predict which ads humans would respond to. So I look at that and go well, what if you just changed, rather than the survey response, you changed
conversions?
Yes. Yeah. Could you actually create an intermediary between the testing process? Because one of the biggest conversations that happens is creative testing. Yeah. And the problem with it as a
what if you just didn't need to?
What if you didn't need to spend money to find out?
Yes.
Right. So the big debate, and you've even talked a lot about this content, is what is the right testing methodology?
Yeah.
Right. And so there's this debate about how much money you need to spend and the structure and blah, blah, blah. And so the question is, what if the LLMs could actually analyze ads in the way that creative strategists pretend they can, which is creative strategists pretend like they can tell you which ads work.
They cannot.
All of them are full of shit, including you, if you ever say that.
Yeah.
But
this is why we don't make that content.
Right. Right. But the question is, what if you could actually validate that you could have an LLM assess your creative prior to it and then recommend which to upload and not?
Yeah.
There's something really interesting about that.
Well, this is essentially my manual bid theory, which is that it's a little bit more expensive than what you're saying, but not a lot more expensive, because the whole idea is that engagement metrics predict conversion metrics. That's right. And that actually engagement metrics pile up really fast.
That's right.
Impression counts are right. You're doing on a CPM 1,000 impressions, so you can get 400 3-second views for $12. So when your ad only spends $40, it's actually it has a lot of information about how
thousands and thousands.
That's right. So I think there's a thing there where I do think engagement reliably does this at least at a probabilistic level. Okay, here's my last question for you, and it actually relates exactly to the question CPMs and stuff like this. One of the things people like to say a lot is that Facebook ads used to be so easy, and now it's really, really hard. I mean, I see that piece of content twice a week. Oh man, now and in the days of rising CPMs and everything else, do you think Facebook ads was ever easy? Do you think it's actually? Do you think it's harder now than it was?
The price and the ECR was better.
So you think that it was more advantageous?
Yes.
Do you think that brands in general are spending more or less now than they used to?
As a aggregate?
The average brand. Oh gosh, average is tough because there may be something more. Yeah.
I think
because my counterpoint is the same. I'll just tell you too. Yeah. Why are there so many more big businesses now that are spending more on Facebook?
Time.
Yeah, that's part of it for sure. Time, but I mean, they also seem to be spending more money on digital platforms, and maybe it's because they push out the value creation and some of those kinds of things. But look, just to air my point here, I just think it's wrong. I just think the idea that it used to be so easy is
has gone down.
For sure. Yeah, but
I think that's the simplest measure.
Yeah, is it though? Because doesn't that just mean people have also gotten better at the other parts of business, opportunity selection and supply chain optimization? We just know nothing about that stuff. Then
I just think though that the idea that everybody just spends to their optimal CAC level is sort of
probably not
true,
optimal,
right? Well, and I think that if you gave everybody, if they could take a better efficiency, they would. Is also true. So
I don't think that.
I just think, I think that every category, you don't think that everybody, if you could get a better efficiency, would take
I think they would spend more.
No, but if they could spend more at a better efficiency. If you hold
then they
spend
would
constant, would you take a better efficiency? The
You
answer is,
would,
of
but
course,
you
yes.
wouldn't hold spend constant. You would spend more money.
But in the event that curve could move up
Yeah.
to
Yes, you
orders
would
of
take
magnitude,
more
you
efficiency,
would
but then
move the curve.
immediately you would turn around and spend more money. That's the reason they're spending the money now.
No, but I don't know. One, I don't think that was true then.
Yeah.
I think
that's because we were too dumb.
Well, no. But I actually think that we overdid it.
Yeah.
And so now we're right-sizing that
Yeah,
behavioral
yeah,
pattern.
yeah,
Like where
yeah.
there was a theory about the network effect of a business and the value capture long term. It goes back to that stat we had at one point where like some crazy amount of spend was never profitable.
Yeah.
That's like
Right.
that's like
Right.
like a behavioral pattern of overdue. I also think this is where like Meta is really nefarious in their incentivizing you to do this. I think this whole narrative around CPMR and reach is like it's a psyop. It is a fundamental psyop.
I don't get it. I don't get it at all.
And so I think that there's this obsession with net new customer visits.
Who cares?
Is like a total psyop. It's all about just getting you to spend more money on upper funnel events that are like less value. Like it's the inventory constraint problem where all of a sudden when the good inventory goes bad, I have to sell you more of something.
Yeah.
And so I have to come up with why you should spend on it.
Yeah.
And the incentive for that is just so strong.
It's so strong. I think it's theoretically a problem for very, very large brands who actually need to do that. But I think the vast majority of brands in our space are not in that world.
Well, I have a brand right now. It's a 9-figure brand that we have run 1,000 incrementality studies. We just did an entire portfolio-wide holdout and basically found that the return of the portfolio in total was like a 0.6. Okay. So the question about this though, and this is what I watch happen, is that if they were to respond to that data, what it would mean is top line decline.
Yes.
It would take years to get back to being a growth story.
Yeah.
And this is what actually, this is the trap that I think Meta actually puts everyone in, is that they actually make it so that if you want to get unhooked from this heroin, your only reality is to go backwards.
Yeah.
And nobody
Wants to go backwards.
Yeah.
And
so,
sometimes it's actually organizationally difficult too.
That's right. And so like, because you have to
lay people off. Yeah. You end up with too much inventory on hand for a while. There's like cash challenges.
What ends up happening is you get this direction where it's like, well, just spend it to like the best.
Just get another hit.
Yeah. And so you're like, well, that's a 0.6. And you're like, well, that's better than a 0.4. So spend on the 0.6. And you're like, oh my God, what are we doing?
Yeah.
But you're like, you have to produce growth. So you're literally producing 60 cents of growth for $1.
Yeah.
And you're just like, oh, how did we get here?
Yeah.
Well, it's because you're so far out there and you wanted to grow so fast and you're so far out and you've outpaced.
You just have the wrong mechanism at that point to keep trying to grow. I think is part of it. It's like you're just trying to push the meta thing forever. When I hear that, it's like, no, you do still need to grow your business.
It's not just meta, it's digital media generally.
Yeah. But you do still need to grow your business. But the point is, it stops at that point being the next most efficient use of your dollar. But it's really hard for people to think outside that when they've built their whole business on it.
That's right.
We have to go.
Yeah.
There's a Dodger game to go to, and we have to clean up some things. So thanks. This was fun.
Hopefully you guys hopefully the audio is not bad.
I think it's good.
We didn't unwrap any baseball packs.
Good.
As always, these are random episodes. We generally get good feedback. The comments are awesome. There's nothing, I don't know if you feel this way. There's nothing better in my heart than a YouTube comment. It's like the best signal.
I'll tell you something. I was at a conference recently and a few people came up to me and said that, like, I haven't done a conference for a while. A few people came up to me and said like, hey, your content's been really helpful to me. Yeah. We make money on this. It's great. Yeah. There's all kinds of financial incentive, and I'm not going to pretend that's not true. That's why we do it. It feels great when people say that. That's some regular person who built a business, and we helped them. It's amazing. Yeah. So anyway, so your feedback's really helpful because we actually care.
Yep.
So, cool. Thanks.